My name is Adit Chopra and I'm a freshman undergraduate student majoring in finance at the College of Business Studies, University of Delhi. In today's presentation, I will be utilizing the Holt method to provide you with the comparative analysis between Expedia Group Incorporated and Booking.com. Booking.com derives a major chunk of its revenue, north of 70%, from the classic agency model. Expedia derives the majority of its revenue from the merchant model. In this business model, the platform buys hotel rooms and then resells them to travelers. Often, the merchant bundles them with airfares and rental cars to provide a much more attractive deal to the customer. Firstly, we look at the CFROI determinants. For Expedia, as the asset turns increase from 2001 to 2007, margins remain constant, resulting in an increasing CFROI level, reaching 167% by 2007. Similarly, for Booking Holdings, 2003 onwards, as the asset turns remain constant, margins constantly increase, leading to an increasing CFROI level. Moving on to the relative wealth charts, we see that both Booking Holdings and Expedia have produced positive CFROI levels while consistently outperforming their relative benchmarks. While CFROI levels are expected to remain relatively high for Booking, a decline in asset growth might impact the total shareholder return. For Expedia, a steep decline in asset growth under 10%, we expect CFROI levels to fall close to 13%. As we see, both these companies have generated significant shareholder returns of close to 200% over the past decade. A steep decline leading to a dismal asset growth would lead to a fall in TSR level. All in all, the Holt methodology predicts a 48% upside in Expedia and a 235% upside in Booking.com. However, a look at the price tracking reveals that Booking has a deviation of roughly 58% and a high bias of 87%. This clearly states that the Holt methodology has been over-tracking the price of Booking Holdings. For Expedia, we see a much lower bias of 23% but a roughly equivalent deviation value. What seems much more interesting is the scenario analysis carried out by the Holt methodology. This reveals a worst-case downside of 15% for Expedia, while a humongous 158% upside scenario for Booking Holdings. Finally, we come to investor recommendations. Consistent CFROI levels for both Expedia and Booking and management's capacity to generate consistent shareholder returns is a positive for both the companies. While the 235% upside in Booking seems like an attractive investment opportunity, a high deviation bias classifies it for a high to moderate risk investor. Expedia's modest 48% coupled with a comparatively low bias of only 23% makes it a comparatively less risky investment opportunity. But a chance of a 15% downside in the worst case scenario adds a whole new risky side to the trade. Thus, since both these companies perform very similar to each other, I would recommend to invest in Booking Holdings as its consistent TSR levels and relatively high CFROI levels predicted in the future makes it a comparatively better investment opportunity than Expedia.